On today's video, I want to teach you the most profitable trading strategy you will ever need. We will analyze this strategy step by step and I will try to make it as easy as possible. So stay tuned. After the intro, we will dive straight into the main points. Welcome back. Please, if you are new to this channel, kindly hit the subscribe button, and if your main focus of being a forex trader is to be profitable, then you need to watch this video to the very end. I'll try as much as I can to make this video very short. So the first thing you want to do if you're a swing trader is to go to your monthly time frame to know the overall trend and your weekly time frame. But if you're a day trader, you can just use the weekly. The daily is enough for you. So now we are on the weekly time frame. What is the overall trend on this weekly time frame? The overall trend I can see here is an uptrend. So this market has been in an uptrend since 2022, year 2021, here 2020, and this is GBP JPY. Mind you, this strategy you can use it on any currency pair. So as we have observed that, okay, on the weekly time frame, the overall trend is up. We'll step down to the lower time frame, which is a daily time frame, which is lower than the weekly time frame, to see how the markets are reacting and mark our zones. We need to mark our key zones. So now let's step down to the lower time frame. So here is the lower time frame. We can see that this market is showing that yes, the market is in an uptrend, right? So what do we do in this situation is for us to start marking our key zones. So once you mark these key zones, you can use it to trade on any time frame. So now, where are our key zones? A key zone is where we see a market, multiple touch of a market, either bouncing back or being as resistance or a support for that particular market. So you need to mark out your key zones, and we are not using the line, because if you use a line, let's say you use a line like this, and this market comes to this line, for example, it might break the line and probably my stop loss might be just below the line and it will take me out. So it is advised to always use a zone, marking out your zone, so that if this market comes to this zone, you know that this market will be within the zone, or just like this particular one, you can see it touches this zone before it bounces back. So after marking your key zones, you go to you mark this is the lower side of my key zone, and now I want to mark the upside of my key zone, right? So the downside will be my support, while the upside will be my resistance. But if there's any breakouts on my resistance and probably a retest and a continuation trend, then my resistance will turn to my support. That is how it works. You can see I'm marking it including the wick of the candlestick. So after marking this key zone just like this, I can now step down to a lower time frame to mark more key zone. I will be stepping down to the 4-hour time frame to mark more key zone. As you can see, we use this color for the daily time frame. So once you step down to the lower time frame, because you will get more pictures, you can see that you will be seeing more key zones at the lower time frame. Because if you say you want to trade from this key zone to this key zone in the higher time frame, then you probably be trading as a swing trader, and it will take you a month before you execute a trade. So if you're a day trader, you have to step to the lower time frame where you can mark more recent key zones. So let's mark our most recent key zones in the lower time frame. So as you can see, this is a key zone. This is a key zone. This is a key zone on the 4-hour time frame. You see the daily, let's change the color of the 4-hour key zone. Let's maybe change it to blue. Inside we can just put any color of our choice, so it can be different from the daily key zones. So why did I call here a key zone is because I can see multiple rejection, multiple touches on this particular key zone. This market, there's a touch here. Let me roll it out for you to see. You see that there is a touch. Where is the writing pad? I need the writing pad. Let me get, sorry. Can't see this. Okay, so let's move on. So you can see that there's a key zone here, because when this market get to this zone, it's went up straight, right? And from this downside, when this market get to this key zone, it came down. It went back to this key zone and came down. You can see from here, it came down to this zone. That is our daily key zone, time frame key zone. And here is the 4 hours time frame key zone, right? It came back to this 4 hours time frame key zone and came back to this place before heading back to this place. So some traders who trade in this strategy might want to enter for a sell. For example, if they see a multiple confluences that give them the sign that this market is going for a sell. And sometimes they can manipulate the market. That is why you have your stop loss just above the key zone. If you are entering this market, let's say you enter this market right in this key zone, and if this market the market will take you out definitely, because it broke through your key zone and went up, then came back for retest before going finally to your daily time frame key zone. So if you like, you can actually mark. I don't like marking too many key zones though, but if you like, you can actually mark more key zones if you don't want to stay too long in the market. You can see there are some reactions here also. The market reacted to this place, because if you go to a lower time frame, you will find that these key zones you marked on the 4-hour time frame are places where the market reacts in one way or the other. So let's move to the 4-hour and let's go to the 1-hour time frame and see what is happening. You see, after this market broke through our daily key zone, this is the place it broke through our daily key zone, it came back to retest it, right? It came back, even though there was a fake breakout here. You can see the fake breakout. It came back to retest it. The fake breakout is for it to clear people's stop loss, those stop loss that are very tight. Then it now went right up. So what will I be doing if I'm a day trader? What will I be doing in this situation is for me to mark my 1-hour key zones. I can mark my 1-hour key zone. This is where the market turned, right? This is where the market turned. You can just shift this like this. This is where the market turned. So this is where the market turned, and let's change the color of the 1-hour key zone so that everything will be clear. Let's change the color of the 1-hour key zone. Okay, I think this is fine. This is fine. We know that this is you can actually even write the hours as a test, so that you know which is which. You can just write it inside that this is your 1 hour and you can play around with it. You can move it to the center, you can move it to the right side, and so you can see how it is moving. So this is the 1 hour key zone. You can see that there's a touch here and there's a touch here. If you like, you can mark this zone also, because the market is currently reacting to this particular zone. You can also mark this zone because this is the most recent key zone in this particular market. So you can notice that this market touches this place 3 times, 1, 2, and 3, right? So now if I want to take a trade on this market, since I marked my key zone here on the 1 hour time frame, if I'm taking a market on the 4 hour time frame, let's go back to the 4 hour time frame. If I'm taking a market on the 4 hour time frame after marking my 4 hour key zone, that means I will be taking my entry on the 1 hour side. I'll be taking my entry on the 1 hour side. So since I have marked my 1 hour key zone, I'll be taking my entry from their 15-minute time frame. So this is how our 15 minutes time frame looks like. So why do we mark all those other key zones? Why do we mark all those other key zones? All these other key zones, why do we mark them? Because we know that the market will definitely react in future if the market bounce back to this, our daily key zones, our 4 hours key zone, our 1 hour key zone. We know that this market will definitely react. So it is left for us to think we want to take our profits on a very far key zone, or we just want to take our profit just from let's say here to this place, and we're out of the market. If you are good, you see that this particular place is good enough. If is good enough for you to earn good money, right? So, and if you are a scalper, you can take your entries, you can mark other key zones from the 15-minute time frame and take your entries from the 5 minute time frame. So, but I think I'm cool with this. And taking my entries from the 15-minute time frame is also clear. So what will I be doing here? As you can see, the market is currently on this zone, right? I will wait for a confirmation that this market will either turn back. I will have to use my confluences, maybe multiple rejection of candlestick. You can see. So I'll use my confluences to see, okay, is this market going back, or this market will break just through this place and get to my next key zone. So it depends on what you want. You see, it depends on what you want. So I'll patiently wait for this market reaction. I don't just jump into this market immediately. I'll patiently wait. I can see a pullback candle here, but I'm not entering this market because I have to wait for confirmations, maybe multiple week rejection or an engulfing candlestick. If the red candlestick engulfs the previous one. And also timing is also very important in forex trading. You will check the time at that particular moment, since you're in a 15-minute time frame. So you'll be checking like 15 minutes. After the next 15 minutes, what is the market reaction? So in this 15 minutes, does this candlestick engulf the other candlestick? If yes, then I can take a short, either depending on the market direction and depending on which candlestick engulf which. So that is how to do this strategy. So some can even go as far as using their trend lines just to mark and see that, okay, this market is forming a lower low, right? It's forming a lower high and a lower low. So I know that, okay, once this market gets to this place, if I am not in the market when this market was around this area. Let me mark this one. When this market was around this area, what do? Maybe I came to this market around this side, right? So I pull out my trend line and be waiting for this market to bounce back to my trend line. And after seeing this long wick rejection green candle, I know that this market is going down. You see this long wick rejection candlestick, so I know that this market is going down, and I will take a short from this angle to this key zone. I'll take a shot from this angle to this key zone. So what will be my stop loss here? My stop loss will just be above the previous high. So now personally, since I know that the overall trend is an uptrend, and I've seen this multiple week rejection and a pullback candle, I will enter for a buy in this market. I will enter for a buy in this market. I'll enter for a long position in this market. I'll be entering from this zone, right? And my take profit will be right here on the next key zone. And my stop loss will be just below my key zone. That will be my stop loss. So I'll enter for a buy in this market and wait for my take profit. But some conservative traders or scalpers might want to go out around this place. Probably they might want to just scalp and get out of the market around this area. But personally, I'll be taking my profits around this side. So you see how the market is reacting to this. So you can also use your fib retracement tool if you want it to guide you on the next place the market is going. If you want to go out on the next place, you can just use your fib retracement tool, mark it from here, your first key zone, taking it down to the next key zone. So if you notice, this market went to your 6.18 zone of fib before coming down to this side, right? Here is your support, right? So it's rejected this place twice. You can see it rejected this place around this side twice. It came to this side first, your 0.5, and came down all the way to this place, tested this place, came down, and so we're expecting it to come to this next level. Currently, I'm in the market right now, so we're expecting it to, maybe before the video finish, you will see that we're expecting it to come to this level. If it breaks to this level, then the next level we'll be expecting it to get to is this level, the 0.618 level. Then if it breaks the 0.618 level, we're expecting it to get to this 0.5 level, all down the way to our next key zone. That is how to use your fib to get the market direction on where to get the take profit, the appropriate place to take your profit if you need clear insights. So you can also use the your psychological levels by marking your psychological level. Let's mark that together right away. So we'll mark out our psychological zone, right? You can see how the market is reacting just as we predicted, and this is the advantage of top-down analysis. You don't need too many indicators to use this strategy. You don't need it. The market just work and play out neatly, right? So let's just take this out. Let's take the fib out and the trend line out and mark our zones, right? So we'll be going to a higher time frame to mark our zone. Let's go to the daily time frame and mark our zone. It will be easier for us to mark it there. Then that's if you want to use zones in entering your market and taking your profits. So you can use either of these strategies I just showed you. So we need to mark our zones now. So we can just start from the recent zones. We don't need to go that too far. We can just start from the recent one. On today's candle was this, right? So let's just stick from this side, and we'll be adding just 50 pips on each zone. So once you put your horizontal line, you will go to your settings and coordinate the line. We said we'll be adding 5 50 so 185, right? 185. The next one will be, we'll be adding 5 so the next one will be 190, right? The next one will be 190. Just plot it and you coordinate it. You coordinate it to 190. 190. Sorry. 190. So the next one will be 195, right? 195. 195. 195. So you can just add some other ones at beneath it. So we have 185, so we're adding 180 below 185. Go to settings and coordinates. So 180. 180. You can add 175 if you feel like. You can add 175. So let's add 175 to our zones. So these are our psychological level. So now, after plotting our psychological level, you can step down to your 4 hours time frame or your 1 hour time frame, or even below any of these time frame to take your trades, right? Let's go to the 1 hour time frame. If you observe, you'll see that the market is reacting to our zones one way or the other. Let me just remove these lines so that you don't get confused. Let me remove these lines. These zones we draw before so that you don't get confused, right? So these are our psychological levels we added. You can see. Remember, your key zones are very important also. You can still leave them. I'm just deleting it so that it will be clearer for you. So your key zones are very, very important also. So you can see the psychological levels are just guidance for you to know when to enter a trade and when to get out of a trade. It should just give you that psychological idea that, okay, if this market gets to this psychological level, I'll be out of the market, because most of the time the market tends to respect psychological levels too. That is, if you don't want to use the Fibonacci retracement tool. So most of the time I can use the psychological level, I can use Fib retracement tools also. So if you step down to a lower time frame also, you can also draw a psychological level on your 4 hour time frame. You can draw it anywhere. It will still give you the same calculation, because as far as you're adding 5 to it, it will give you the same calculation. So you can draw it anywhere. So as you can see, we are on the 1 hour time frame, and this market tends to react around this our psychological level. You can see, even though our daily zone is around that side too, the market also tend to react around this side, and we can take in this market from this psychological level, from this particular psychological level, and your stop loss will just be below here, and your take profit will be at your next psychological level. That is how to use psychological level to trade. Your take profit will be at the next psychological level. Don't forget, before entering any market, you need to check some confluences. Like I always say, you have to check your candlestick reaction, the weak rejections, the engulfing candlesticks, to see if this market is going back or this market wants to break your zone and go down. Remember, the overall trend is a buy market, so that's why we are taking buy most of the time in this market. That's why we're taking buy most of the time in this market. But you can also take a sell, but when taking a sell, you need to be very careful. If you are not a professional trader, you need to be very careful. So, but since the market is an overall trend, you can just keep taking your buy, and you will see that this market has been reacting to each of your psychological level. Let me just remove this. You can see that this market has been reacting to each of your psychological level. If you definitely go back and scroll, you will see that the market reacts to your psychological level one way or the other. So it will just give you idea that, okay, I want to get out of this market on my next psychological level. So that is how to use the psychological level. So another method, if you want to trade, another strategy is for you to probably be marking that, okay, if this market is an uptrend, then I will be expecting this market to be forming a higher high and higher lows, right? It should be forming higher highs and higher low. Higher highs, and I'm expecting this to form a higher low, right? Higher high, higher low. So if the trend, if it stops forming higher high, then probably there is a little retracement that will form before continue forming a higher high and higher low. Likewise, in the opposite direction, and the sell market, you are expecting this market to be forming a lower low and a lower high and lower low. So if you want to follow such strategy, you have to keep marking each highs it form or lows it form. You will just take note of the previous. You take note of the previous low, higher low it formed, and keep marking it that, okay, this market must not go below the last higher low. That is when this market will refer that, will say, okay, this market is in an uptrend. It will just keep forming a lower low, higher low, sorry, to keep forming a higher low. So that is when I'll say, okay, this market has been in an uptrend. So each time, if I want to take my trade, I know the proper place to enter this trade, and I know at least where to place my take profit. And one other good thing I want to advise you is that if you are a forex trader, in order to become a profitable forex trader, kindly treat it as a business, not a gambling game. Kindly treat your forex trading as a business and not a gambling game, because once you start treating it as a gambling, you tend to lose your money. Fastest way to lose your money, because you might place a trade and you keep winning. It will keep gingering you to continue placing that trade, and before you know it, the market will hold you down, and you end up blowing your account. So avoid over trading, and always apply proper risk management. Depending on your account size, know the lot size to use when you want to trade. I don't want to really go deep on our risk and the risk management, because I've already discussed that on this channel. You can just scroll to our videos on this channel, or I'll drop it right on this at the top of this video, so you can watch it if you want to watch the risk management strategy. So thank you for watching this video with us today, and we're hoping that with this you will learn to be a profitable forex trader, and will keep milking the money all together. Thank you, and bye.